You see two lines cross and you suddenly think it's a reversal confirmation, but it's not. Let's understand in this video what exactly is MACD minus the drama. Hi, I'm Pranav VK, an NISM-certified trader and trainer and your friendly guide at Kotak Stockshaala. Today, we are going to break down one of the tools that look complicated, but once you get an understanding of it, it's like having X-ray vision of understanding strong trends. Let's simplify the MACD, which is one of the most powerful but also one of the most misused indicators in technical analysis. MACD stands for Moving Average Convergence Divergence, which sounds like a term my engineering professor made up to scare us. It's based on two moving averages, a 12-period exponential moving average as well as a 26-period exponential moving average. The difference between the two lines is called the MACD line. And then there's a 9-period exponential moving average line, which is also called as the signal line. And finally, the cool histogram that you see, that's the difference between the MACD line as well as the signal line. Think of it like a three-layered sandwich. The MACD line is the filling, the signal line is the sauce, and finally, the histogram is like the taste test. So let's get to the real chart to understand what exactly are these lines and how do they look like. Here, I'm taking the example of Trent Limited on the one-day time frame, and I've added the MACD indicator. So let's understand what all does it show. We have the blue line here, which indicates the MACD line, and we have the orange line, which is the signal line, and finally, we have the histogram, which is the difference between the MACD line as well as the signal line. So what exactly does a MACD show you? It shows you three things. Number one, momentum shifts. Number two, potential reversals. And number three, trend confirmation. So let's understand the bullish crossover as well as the bearish crossover and how it happens. For a bullish crossover, when the blue line, which is the MACD line, crosses above the signal line, that is when it indicates bullishness and it is called as the bullish crossover. You can also see that as and when here the MACD crossed the signal line, the charts also are going bullish. Similarly, when the blue line, which is the MACD line, crosses below the signal line, it indicates a bearish signal and it is also called as a bearish crossover. As you can see here, when the blue line crossed below the orange line, you can also see that there was a trend confirmation and the markets were bearish for Trent Limited. But here's where people get MACD wrong. Many traders treat every crossover like a party invitation. But MACD can lag because it's made of moving averages. So if you blindly trade crossovers, you'll often end up late to the party, or even worse, you'll be dancing at the wrong one. That's why context is king. So always ask, what's the trend? Are we at a support or resistance? And better yet, do we have a volume confirmation? MACD plus logic equals profits, but MACD plus emotions equals donations to the market. Now that we know what not to do, let's understand how to smartly use MACD. There are three ways in which you can use MACD smartly. First is with price structure, second with volume, and third in range markets versus trending markets. Let's head to the real chart to understand how we can use MACD using price structure. Again, I have taken the example of Trent Limited. Whenever the price is creating higher highs and higher lows, but on the other hand, MACD is forming lower highs and lower lows, then it is called as bearish divergence. It shows that the trend is weakening and smart traders become cautious at this point. Similarly, with bullish divergence, when the price is making lower highs and lower lows, but on the other hand, the MACD is shifting from a lower high, lower low to a higher low and higher high. So this is called as bullish divergence, where the price is trying to go down It's pretending to go down, but it doesn't want to go down anymore. It's like the stock is tired of falling, but still it's pretending to. So here's the second way of using MACD smartly, using volumes. Now once you get a confirmation or a crossover using the MACD line, if you couple it with volumes, then you're going to have a very high probability of profit trade. Let me show you an example on the real charts. I'm continuing with the same example that we took earlier, Trent Limited. So here, as you can see, the blue line, which is the MACD line, is crossing above the signal line, which shows us that the market is bullish. Similarly, the price is also bullish, but the best part is that now I have added a volume indicator. And as you can see here, the volume on this specific day, just after the crossover, is a huge spike compared to all the other days, which also confirms that the smart money is entering this specific stock and on this specific day, and you can see the market has just zoomed to the top after that. Here's the third way to use MACD smartly, in ranging markets versus trending markets. In ranging markets, MACD gives frequent fall signals. Let me show you on the live chart. Here, you can see that on a one-day time frame chart, when the market is range bound, you can see that the MACD line as well as the signal line has been moving up and down, giving a lot of false signals. But however, in trending markets, it's a solid confirmation. So use it to ride the wave, but not to identify the bottom. Let's see if you really need to change the default settings of MACD. By default, you're going to have the 12, 26 and 9 as your settings in MACD indicator when you put it on a chart. But if you want more sensitivity in intraday trading, then you can try the 8, 21 and 5 settings. Don't tinker too much, master behavior, not tweaks. MACD is like the turbo boost on your car. It doesn't help you steer, but when you're already headed in the right direction, it helps you go faster with confidence. So when you are turning, make sure you're not turning on your turbo boost. Otherwise, you're gonna spin around and lose control. So here's a quick recap of what we have learned so far. MACD is a momentum plus trend following indicator. Crossovers signal momentum shifts but not reversal confirmations. Watch for divergence, volume and trend alignment. Use MACD to confirm but not predict blindly. And finally, combine it with price action for real confidence. Indicators don't predict the future, but they whisper about the present. In the upcoming video, I'm going to show you how to combine multiple indicators without making it a rainbow mess. Like this video and share it with a friend. And don't forget to subscribe to Stockshaala by Kotak Securities. I am Pranav VK signing off, and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.